Good good morning, everyone, and thank you, Vinny sir, and group and mentors for continuously enriching our knowledge in respect of this GST subject. Today, we are directly discussing the case study in respect of real estate issues, and we have taken three case studies for today's discussion. Out of this, one case study I have directly taken from BCS RRC. They are conducting RRC this Thursday, Friday, and Saturday. They have taken a couple of case studies in respect of real estate. Out of that, one case study I have taken with the approval of Venu sir. And also, I acknowledge uh, that I am using those case study for today's discussion. Yeah. Our first case study is uh, yeah. First case study is very simple, and we will not go into the provision as everybody knows the basic provision. We directly discuss about the issues. The first provision is in respect of the transition provision. So JDA is area sharing, and last we have a revenue sharing concept. Now we are discussing JDA in respect of area sharing. The date of JDA is 20th October 2015. This is pre-GST period. The JDA started pre-GST, and the area sharing agreement 15/3/2017. This is also before GST period. The date of OC, that is occupancy certificate received post 1/4/2019. That is the real estate different provision, the different provision which was notified from 1/4/2019. The OC got received on 10/5/2017. So we have three issues here. First, service tax, and second, GST provision which is related to 17/2017 till 31st/3/2019 and 1/4/2019. So this is the transaction where the entire construction has taken between three phases where there was a change in law. So it becomes a crucial to see the tax implication and other things. So first issue, taxability of TDR. So in each joint development agreement, we know there will be a transfer of TDR from one person, that is landowner, to a developer, and developer provide construction services. Because it's a area sharing, there is a concept of even construction service being provided by developer to landowner. So in case of a joint development agreement, the majority issues will always be around TDR and construction service provided to landowner. In respect of construction service provided to the end consumer, that is almost settled. There is no much dispute and other things, but the majority of dispute that arises is in respect of TDR and the construction service. In respect of the first case study, first we will analyze whether the TDR is taxable. So this is very which is the thing which is almost settled. So because the date of JD, that is before the GST period, and the date of OC is 1/4/2019. So there can be a doubt whether RCM is applicable as applicable. And if you see, to analyze this, we need to answer some basic questions. And once we answer these questions, we will be in a position to say whether it is a taxable or not. One, when does the transfer of development took place? Is the transfer of development right is a one-time activity or a continuous supply? Whether the provisions of Finance Act is applicable or GST Act is applicable. Once we answer this question, we will be in position to see whether there is a taxability or not. So when does the transfer of development right took place? So as we all know, the transfer of development right is taken place through an instrument called joint development agreement. Through a joint development agreement, the landowner has given a possession right and development right to the developer, and developer which enable the developer to enter into the construction area and start developing the land. So that's why it's very clear that the transfer took place through instrument of JDA and it is a JDA. And the next question, which I said, it is a one-time transfer or continuous transfer. Even the effect of JDA may be continuous because once the development right is transferred, the developer may enjoy the continuous right to develop the land. But the transfer took place only once, that is on the date of JDA. The effect may be to use over a period of time, but legally the date of transfer is nothing but a JDA date. Then again, we need to see, once we decided that transfer took place in the JDA date, the JDA has taken place before GST period. Hence, as per section 65B44, the transfer of title in immovable property is outside the ambit of GST. DFL commercial projects also have upheld this. In respect of transfer in immovable property, there is no service tax implication because the transition period, the JDA has taken place before GST, and transfer of development right also taken before GST. Because of that, the service tax is applicable, and as per the provision of the service tax, there is no liable to pay TDR. And also we can say the new RCM notification clearly says RCM is applicable only for a project which has entered only after 1/4/2019, because this project is entered before 1/4/2019. The liability to pay is on a forward charge by a landowner, provided there is a applicability. As per the service tax provision, there is no applicability. Next, this is the one of the little bit simple issue, which is almost there is no much dispute about it, and I have taken this first. Then we will see next issue in respect of construction service. If anything is there, I'll just pause for a while. Otherwise, I'll continue.
Please continue, Mela.
Yeah, thank you. Next, in respect of the construction service, we know this construction service provided by developer to a landowner. This construction has taken place in a 3 phases. One, during the service tax period, there was a substantial work done by a developer to a landowner during a service tax period. Then there was a substantial work done during a GST period in both real estate taxation version 1 and version 2. In both places, there was a substantial degree of service which is rendered by developer to landowner. Now there can be a 3 situation. One, say entire service is liable for service tax. There can be entire another argument whether entire construction service should be liable for GST, and proportionately to the extent of service tax period, service tax has to be paid. To the extent of service provided in GST has to be paid. So all these 3 issues, because there was a different views among the profession. Also advanced rulings also differing this view. Some advanced ruling says proportionate tax has to pay. So we'll just see all views. Okay. The first important thing what we need to consider is, I'll just touch upon the transition provision, because we know transition provision we have discussed very long back. So I'll just take only 1 second to see what is the exact transition provision which is applicable for in our issue. See, as you know, the section 142(11)(b) of the CGST Act, notwithstanding anything contained in section 13, no tax shall be payable under no tax shall be payable on services under this act to the extent of tax was leviable under the said service under Finance Act. The only concept, only important issue that to be seen is whether whether this particular service, that is the construction service provided by developer to landowner, is it liable under service tax? So if the liability to pay tax under service tax arises, then there is no GST is applicable. If liability to pay service tax is not under Finance Act, then automatically there will be a liability under GST.
Mylar, which provision you are referring? A, B, or C?
Huh?
A, B, or C?
B, sir.
Okay, why not C?
See where both.
So, do you think VAT is not applicable?
Yes, VAT is not applicable, sir. Because it was
Oh.
a barter system, and there's clarity that there is no VAT is applicable on this transaction.
Why VAT is not applicable, Mylar?
Because it was a barter, no, sir. Because for a barter in Karnataka, we didn't had any VAT on this.
Oh, on those lines.
Construction service and TDR, it is a barter, so there was no VAT.
But after L&T judgment,
Yeah.
Alter holds no position, right?
So, I will still say that C would be applicable and not B.
And we had circulars also which says that okay, land value is taxable in lieu of landowner share.
Okay. The L&T, but L&T was not specifically covered, no, this barter system.
No, they specifically mentioned in para 115 saying that okay, transaction between landowner and developer is also taxable. There's a valid consideration, is what it says.
Okay, I'm not analyzed in that aspect. Definitely, I'll just see, sir. Thank you for.
But even if 11C applies, no, then it comes with certain conditions.
Sir, on a similar point discussed in case ARRC, Jatin sir have also mentioned that 142.11C is not relevant. It is to be reported only in Tran 1.
One 142.11C covers both VAT and service tax.
Yeah.
Transactions which suffer VAT and service tax, right?
Correct. Where the tax was paid on supply, both under. Okay. So it says where a tax was paid on supply, both under Value Added Tax and Finance Act, tax shall be leviable under this act, where it was liable for both and where they have paid both. Then what they say, you the tax is again payable under this GST, and you can take the input tax credit. Correct. But in our case, they are not paid both service tax and VAT. And also, C does not use whether it is leviable or not. It says only it is paid.
So C is only entitlement.
Yes.
C serves A and B.
Correct. So it's according it says covers the case where the.
So you're only considering service tax for the purpose of discussion.
Correct. Because of the barter and these things, I have considered only B is the relevant for our discussion.
Mylar, in each state was it barter and not taxable? Even barter, I feel it is taxable. That's a different thing. What about other states?
Except Gujarat, there was no other state according to me. So, especially they have amended something. I was long back I read. Except Gujarat, I think no other state they used to pay tax because
Okay.
it's border concept. So others can correct me if I'm wrong.
Okay. Please proceed.
Yeah. Okay. So the important word here, leviable, whether we paid service tax or not, whether if it is leviable to service tax, then GST is not applicable. So then again, important things becomes whether the tax is leviable or not. To check whether the tax is leviable, the important rule, the rule 3 of point of taxation rules becomes important. So I just take a pause and state that. So this rule is very crucial because there was a circular which was issued under service tax, and also the entire taxability under GST is based on this rule. So there are two interpretations which is possible. I'll just take this, and also we'll discuss this in case where the person providing the service receives a payment before time specified under A, then the time when they receive such payment to the extent of such payment. Yeah. See,
Mylar,
Yes, sir.
sorry to interrupt.
Sir.
Actually, when you are talking about Rule 142.11b,
Sir.
what service used, the service what to be seen there is under the as per the definition given the GST law or as per the definition given the service tax law. You should, I think, can just also examine that.
Yeah.
Proceed.
Yeah. Thank you, sir. Sir, according to me, the service, because the transition provision we are looking from the, and it is also, the 142 is also under GST provision. According to me, the service has to be seen from the GST angle. Once we need to identify which tax we are taxing it under GST law, once that service is fixed, then we have to see whether that service is liable to tax under a Finance Act. Then if it is leviable to that service in the Finance Act, then it is not taxable in GST. If it is not leviable under service tax, then the basic question comes again to say that it is a service which is liable to be taxed under a GST. Is that my understanding is correct, sir?
You proceed. No, I just wanted that, let everything discussion complete. Then we discuss.
Okay, thank you, sir. Okay, now this entire the point of taxation rules, it says if the payment is done, then to that extent is deemed to be completed. If the payment is not done, then the date of completion, the point of taxation will be completion of service. Okay, the expression says for the purpose of this rule, where any advance by whatever name called is received by a service provider towards the provision of the taxable service, the point of taxation shall be the date of receipt of each of such advance. Then it becomes crucial, the word payment. Okay, so now we discussed in the joint development agreement, once landowner gives the development rights on the date, first date, that is on the date of joint development agreement, that is the consideration. The landowner gives the consideration of development right to the developer, and developer provide a construction service. For the construction service provided for a developer, in other words, is the consideration is nothing but a development rights. The developer receives the development rights on the first day, that is the date of JDA. Now the crucial point is the payment. What does the payment refers? Whether the payment refers is only a check or instrument or a payment in the through bank or cash, or that payment even includes consideration. So we'll just analyze this in both the angles, and we'll try to see some of the judgment. Honorable High Court in Punjab has held that payment has no narrow technical legal meaning restricted to the payment of money. It signifies the satisfaction of the claim. Also, if you see the book of Ramnath Iyer, the Advanced Law Lexicon, the word payment has been defined. It says in a legal contemplation, payment is the discharge of an obligation for a delivery of a money or its equivalent. It is generally made with assent of the both the parties to the contract. The payment is also defined as a performance of an obligation for a delivery or a goods.
Miller, 1 minute.
Has it?
This 1958 AR judgment, does it have relevance in the context of point of taxation rules of service tax? Or it is just taken out of context from section 80 of Limitation Act and planted in the discussion on service tax? Because if you search, you will find a judgment in favor of both sides.
True, sir.
Don't
Oh.
simply quote a judgment if you cannot, if without substantiating that it is in pari materia. Secondly,
Has it?
Ramanathan Iyer is citing a definition of payment. In what context? Context will decide everything. We know that. So therefore, please be cautious when you say payment is to be substituted with settlement of consideration. Then the deliberate legislative need for using the word payment when they could have used an alternate word to cover non-monetary also will be lost. Please substantiate 1958 AR judgment, how it is relevant in service tax. You don't have to pause, you can continue, but as you go through, please substantiate it.
Yeah, yes, fine. This is one of the possible argument from the SEC side, because the crucial word payment, which is there in the point of taxation rules, how department interprets and how SECs are willing to interpret is a little bit different. Because the payment is both under service tax and even under Limitation Act, it is out of the contractual obligation. Whenever the word payment, what I was of thinking, what is the word payment? Can we have to limit this payment to a legal technical word, or we expand the meaning? That's why I searched, and Jen sir rightly pointed out that because it is under a Limitation Act, where they've expanded the meaning, and also in the definition, I was just looking to interpret the word, what is the payment? There was an alternative view is also taken by a department. See, because even circular 151, which was issued by a department, is also view that the payment is not the point of taxation, because the consideration is not a payment in monetary terms. Even department has took a view that the liability to pay arise in respect of a service, in respect of a service of construction service, is on completion of the service. Because if you say that para 2B1 says service tax is liable to be paid by a builder or developer on the construction service involved in the flats to be given to the landowner at the time when the possession or a right in the property of the said flats are transferred to the landowner by entering into conveyance deed or similar instrument. Example, allotment letter. So, see, the service tax rules are Finance Act. There is no where it states that liability to pay arises on the date of allotment letter. But the circular has interpreted that the liability to pay arises only on the date of instrument where the construction service is completed, with the view that there is no payment obligation here. The consideration is already flowed from landed to a developer, but it should not be regarded as a payment from the perspective of a department. So there's a one more view that circular is ultra, whereas the provision of the statute and applicable rules. But it is only to say that the payment is already done because of the settlement of obligation. But it is very clear from the government's perspective on the circular that the liability arises only on a completion of a construction. So there's one more important thing to be noted here. One, even under circular 151, because the provision says on the completion of construction service, the completion of a service. Here, the one important thing which I was not able to, because this circular 151 is the same what they have carried to forward 2018 in GST period. One, the to landowner by entering into conveyance deed or similar instrument. So because we have storage lamps and old cases to say that the development agreement will not transfer any title by a landowner to developer, and will there be any requirement by a developer to enter into a conveyance deed is the one question which I am not able to understand. The mentors can help me out this. And also with the similar instrument, allotment letter. See, conveyance deed or allotment letter, whether it is, according to me, it is not one and the same, because the allotment letter then again comes whether the allotment letter can be equal to sharing agreement, because the sharing agreement
See, we have to keep in mind when central government issues circular, they keep in mind trade practices across the country. In Maharashtra, particularly Bombay, you are aware that the ownership of the apartment is with the society. Society will own the apartment. Society enters into redevelopment. Owner of the flat is only a member of the society. Society will issue allotment letter to the member. There are different ways in which we should not look at only facts in Bangalore, the trade practice in Bangalore, and assume that this is the way it is all over the country. Telangana and Andhra have a different practice.
Okay.
In Tamil Nadu, joint development agreement is not required to be registered. There are many such practices. So therefore, we should not, if we identify words that don't have relevance in Bangalore trade practice, we should not somehow find an explanation for it in this context. It may be relevant there. Allotment letter is when a society allots a flat to a member. When the developer confers on the society that authority to now start allotting flats to its members.
Okay.
Otherwise, we have a sharing agreement. So consider that it will apply differently in different states.
Different transaction for a different transactions. Got it. So this conveyance deed, can you just give me an
1
example?
minute. Sorry, since there's a break. Also, actually, you started with the discussion with the word, emphasizing on the word levy. But in the course of discussion, you get into point of taxation. Is the levy and the point of taxation, how is it connected?
Yeah.
Can you just also discuss on that?
Yeah. So levy and the point of tax under GST we have a different, but even under Finance Act, the point of taxation rules, it says to the extent of this, it is deemed to be leviable. So because of that, I just linked both, sir.
Can you just repeat what you said? Deemed to be?
Provided. I think one word is that deemed to be provided and leviable. So that because of that, I just move to the point of taxation to say which point the tax is leviable. Sorry, Jitin sir, this conveyance deed, can you just, because my understanding was totally different. because there was no transfer of title from landowner to developer. Will there be any situation which I am not able to think over that requires reconveyance by developer to the landowner, sir?
See, unsold units in the developer's share. What will happen? Let us say developer has got 60 units falling to his share. 50 units he has entered into sale deed, and on behalf of the landowner, the sale deed has been executed also. 10 units are lying as it is. Now, how will let's say the developer holds on to these 10 units for 10 years. And now in the 11th year, he wants to sell one of those 10 units. What paper will he have? If you see 3/21, the GST notification, it says if unsold units, you cannot wait indefinitely. So take OC date and conclude it. So there is a practice that the developer will tell the landowner, okay, boss, take these 10 units and register it in my name. I had construction WIP in my books. Now I will have 10 completed flats in my books as stock in trade. I will sell this later whenever I want, or I will rent it out. Anything I want, I can do with it. So there is a deed that is arrived to convey it to the. This is one of the situations, but.
Sir, I totally agree. This is in respect of landowner conveying to developer. But 151 says that the said flats are transferred to the landowner by entering to conveyance deed.
See, when the landowner enters into a conveyance deed to the developer, that is the evidence that construction is now satisfactorily completed.
True.
Correct, no?
Correct.
So therefore, they're trying to the point of taxation, they're trying to converge. When the second transaction is ready to take place, then the first transaction must be understood to have concluded.
Okay. Yeah, got it, sir. Thank you. Yeah. So this week, the final will be as per the rule 3A, the point of taxation rules. If the invoice is not issued, the point of taxation shall be the date of completion of the service. If you see the entire construction service completed on the date of OCR, that's allotment letter or sharing agreement date. So because of that, the GST is leviable in this case. Also, we can refer circular 151 also, which is given in the same line. Yeah. This is in respect of the first case study. Shall we go to second case study or any?
Conclusion,
anything you want to add?
Nothing to add. Conclusion. First case study in conclude.
Yes, GST is to be paid, sir.
Justification.
Transition, GST should be applicable.
Justification. Provisions okay, conclude.
Yeah, sir. There's as per the point of taxation rules, even 142(11)B says if it is leviable to service tax. Even as per the point of taxation rules, the leviability will come only after the completion of service. The completion of service has taken place only in the GST period. So it is not leviable to service tax, hence it should be leviable under GST.
Now we have to ask if everyone agrees with your view.
Yeah.
I'm sure many don't agree with your views. Anybody? Okay, I'll share my views. Mila, take an example. 99% of the construction is completed. Okay. Hello?
Audible, sir.
99% of the construction is completed. 100% of the material have arrived at site. Now GST is introduced from 1/7/17. Sales will take place in the future. All right.
Got it.
Now booking has been done for all the units. Installments will slowly flow. Some have got loan, some have made advance payment to get a good rate, etc. Will 151 circular or 142.11c reintroduce levy of tax once it has already got introduced? See, what is 151? It is only giving clarity as to when government wants to collect the tax.
Correct.
In VAT as well as service tax, we know that tax is payable on billing basis.
Correct.
So if booking has been done, customers are all known, 99% construction also complete, 100% material arrived at site, you're saying all over again I will pay GST. I can't even go back and renegotiate with my customer.
In your example, the entire thing is already completed in service tax period itself. So I was also saying that where the service is got completed, but where I
No,
took an example where the service was given on the three.
no, whatever percentage of work already done, how can there be GST incidence just because GST says the time of supply occurs later? 142.11b itself we will take.
Huh.
It says notwithstanding anything contained in section 13 or 12, correct? La?
Correct.
Even though any of the time of supply events occurs during the GST period, if the levy of tax already occurred under the earlier tax regime, the levy cannot occur once again. In fact, 142.11 is against your argument.
But on what basis you're saying that levy is already occurred under service tax, sir? Based on what?
What is levy? See, 66b says tax shall be levied on provision of service. Contract is there. Work also is completed to whatever extent of work completed up to 30th June. Why is supply not complete that at that time? Can Circular 151 change the fact that service has been provided?
Jitin sir, can I also give a little, little different points
Please.
on
Please,
the
please.
Mylar?
Yes, sir.
First and foremost thing, at least my reading of this entire transitional provision cannot substitute the fundamental aspect of levy, the original decision of Wazir Sultan Tobacco, where the law was clearly laid out that once the levy is attracted before the new law is introduced, there cannot be a tax under the new law. Now, there may be various point of taxation issues which may come up. That is where, as a relaxing provision, 142.11 is coming. Please consider section 142.11 as a relaxing provision, not as a taxing provision. Please consider that. Okay. So if you look at it from that perspective, though something is happening in the current regime, but the levy, we're not talking levy aspect. Though the levy aspect of some activity happening in the current period, still there can be relaxation is 142 in the context in which we read it. Secondly, the charging section under the Finance Act says not only provided, even agreed to be provided also there. So I think we cannot lose a point, attention of that aspect. Services provided agreed to be provided. In the context of that is when when the advances was made taxable is when the service tax law got amended to include that to be provided. So the argument which is being taken in this real estate sector for the past agreement, whether it's going to sustain, not sustain the later part of it, but the argument being taken is that the service is agreed to be provided and there is a transfer of development, right? So essentially the levy from my perspective is completed. So hence there cannot be a levy again on the service tax levy. So the word levy. Then you got into, I mean, going back to central excise fundamental thing, the levy aspect is different from the collection. The point of levy is different from the point of collection. Going by that principle, the point of taxation is only the point of payment of tax, but the levy got attracted as soon as you enter into agreement. Is the one more argument being taken in this regard. So, looking at that perspective, keeping in mind that Wazir Sultan Tobacco and also the word leviable, so the argument is being placed, the views are being taken that even though certain works have happened, what Jatin sir said was a partially work happened. Even a scenario where the works have not happened, still the arguments have been taken in a litigation that there cannot be levy of a GST on that transactions. Okay, so this is what is my point, which I wanted to put across. Jatin sir, you would like to add anything or counter this point on for the benefit of all?
Yeah, the point is made. Continue. Continue.
No, I think no. My point was only just wanted to bring in this aspect of levy and collection. There are two different points, so which we need to be conscious about, and whether we can apply that in the context of this scenario to contest this issue. If somebody has not paid or sort of a thing, consultation is a different thing. Again, that two advance links have come. Do not, but partially to the extent work done, you have to pay service tax. Past, I mean, whatever work not done on the cutoff date, you have to pay GST. All those decisions are there, which you can discuss. Myla, you can take.
Others, any view?
Mylar,
Yes.
yeah, I was also looking at a scenario where the landowner is selling his portion of units under the service tax era. Okay, his liability to pay service tax would also be there. Irrespective of the fact, the sale booking can happen irrespective of the construction stages. So the units would have constructed, not have constructed, only 1% done, but the bookings could have also happened. So something which levy triggered under the earlier period, I wouldn't say that there can be one more levy again coming for the, because landowner is selling the units which he is likely to get in the future period from the developer.
True.
Yeah, I am of the view that for the construction services, also the time of supply happened there.
But
Levy
sir, you are mixing two different suppliers where you are saying the landowner has sold his portion of apartments to the customer. Where again there is also depends upon the event based. If it is to the extent of where the supply has event has occurred before the service tax, you would have paid the service tax.
Correct.
Balance you would have paid GST.
GST.
And
Correct.
same the developer here providing construction service to the landowner. Then what I am of the view that both the transactions should not be clubbed because that itself is taxed. Why not this? So both are different. We have to analyze both transactions differently according to.
See, I'm only confused where the deferring portion of the service tax levy to the completion. If that was not there, then there cannot be applicability of GST at all.
True.
That's my view.
So you are totally agreeing that because there was a deferment and GST is payable, or sorry.
No. The time of supply even for service tax is the completion. So that is the only thing which I'm just thinking, similar to 4/2018.
Okay. Any other views? Shall we continue with the next case study?
ಆಮೇಲೆ ಈ ಕೇಸ್ 1 ಅಲ್ಲಿ
Sir.
ವಾಟ್ ಈಸ್ ದ ಪಾಯಿಂಟ್ ಆಫ್ ಡಿಸಗ್ರಿಮೆಂಟ್ ಒಂದು ಸಮರಿ ಮಾಡ್ಬಿಡು. Then
Sir.
we will proceed further saying that we were not in a position to conclude.
Okay.
Or you conclude it if you are in a position to conclude.
Okay. Yeah. So here the only difference point which is arising is one, what is the point of levy? For point of levy under Finance Act, whether we should see only section or we read along with the point of taxation rules. As Rajesh Kumar sir pointed out very clearly that the service tax liability leviable to service tax includes not only provision of service, even agreed to provide service is also leviable under service tax. Sir was made a point that once it is leviable, how can there be one more levy under service tax? And there is a, but if you read along with the point of taxation rules, it says to the extent of the point to tax will arise only at the time of a conclusion of completion of a service if there is a subject to the payment. Again, we have seen the definitions of the payment. And we concluded, I was concluded that the payment is not applicable. Only a completion of service is applicable along with the circular 51. Because there was no levy, GST was applicable. That is one point of argument. And again, Rajesh sir clearly pointed out that other view. Because of that, we are not able. I am not able to conclude this.
Sir, you will proceed to next case study.
Yeah, sir, if you can throw some more light whether your view, whether point of taxation and payment and how it has to be interpreted.
See, there are now 2, if not 3 views here. One is proportionate to work done previously, there cannot be GST.
Okay.
Whether or not the earlier tax was paid or not paid, if the levy was under the earlier law, levy cannot come back in GST. That is one possibility. Another possibility is what Venu is saying, since Circular 151 says completion, Circular 151 will be continuing to survive even after the act is repealed, that on the date of completion many years later, still pay service tax. It was not clear whether it is full unit or to the extent proportion of work done up to 30th June. Third view is what you are saying, that entire thing is liable to GST, nothing is liable to service tax. 3 possibilities are there.
Yeah, 3 views. Yeah.
Next case study, madam.
Sir, how to eliminate and how to conclude this?
See, it all depends on what fundamentally we understand the law to be. Like Rajesh is saying, if you go back to Wazir Sultan, Wallace Flour Mills, Empire Industries, and come from there, the levy does not happen again and again. If you believe in that first principle, then once levied under the earlier law, levy under GST law cannot arise, no matter what GST law says. Because GST law cannot apply prior to 1/7/17. That is first principle. Venu's view is on the basis that there is a saving clause in 174. The saving clause will save levy occurred in service tax even after GST has come in ad infinitum. That is Venu's view. Your view is since 151 says completion, by the time completion arrived, service tax itself went away. Section 13 and then 4/18 of GST says completion is relevant. Therefore, forget service tax. We will go into GST and pay GST. So it all, the resolution will revolve around what is the starting point of each view. On that basis, each participant may be able to come to their own conclusion.
Thank you, sir. Yeah, we'll go to the next case study. Here it is also a joint development agreement with area sharing. The date of JDA is 2010-2017. So this is in the GST period before 1/4/2019. The date of area sharing is 1/3/2018 before second rule of taxation. Next, occupancy certificate received in 10/5/2019. So here only one important thing which I need to discuss here. One, taxability of TDR. Next, taxability of construction surveys. Here, in both the aspect, I've written a little bit wrongly here. There is no question or debate in respect of taxability. The only question that we need to discuss here, TDR, whether it is a forward charge or reverse charge, when is the time of supply, and construction surveys, what is the point at which we need to discharge the taxes. And we are not discussing anything about the taxability. The taxability is only clear. There is only, we are discussing the different circulars and to see when tax has to be paid. Okay. So this is the case 2. TDR services under construction service. We have three different date of execution, area sharing, and occupancy certificate received on 10/5/2019. The important discussion and the conclusion will play around notification number 4/2018, which is issued under section 148, dated 25/1/2018. So if you see this notification 4/2018 as deferred the taxation to a future point. So again, there is a litigation whether it's a time of supply shift or only liability to pay as shift, that we'll see later. Okay. Now the first point is the date of JDA is 2010-2017, whereas the notification date is 25/01/2018. Because the TDR is because there was no deferment of tax liability, the transfer has taken place on the date of joint development agreement. And as on the date of joint development agreement, when the taxability has triggered, that there was no concept of RCM. Because if you see this 5/2019, because the OC date is 10/5/2019, if you see the 5/2019, again it says that tax has to be paid under reverse charge. But if you carefully look at the notification, which clearly says if the agreement entered, if it is only after 1/4/2019, then only that RCM notification is up. Because this JDA is executed before 1/4/2019, the first concept is that there is no RCM liability. That only thing which is payable is only forward charge, and the JDA execution date is 2010-2017 because it should be forward charges applicable. The only landowner has to discharge is liability on a transfer of development right. Then again, this discussion is very important because there is a lot of tax planning that is taking place because of the time of supply. Because whenever under the initial period of agreement, if the department has inquired or department audit has taken place, wherever they have clearly said that the tax liability is on the date of OC. OC has not come, we are not paid the tax. There was an argument which has taken. Now OC has come. Now the argument is getting changed to say that it is not today, it should have been levied under levied in the year 17/18, because we know that the limitation period to issue a show cause notice for a 17/18 is got over, and also in this month for 18/18 is also getting over. So it becomes a crucial point to see this. When is the time of supply which is getting arised? The GDA is executed because in the 1718 and it is a forward charge. We can safely say that the liability to pay tax arised in the year 1718, not in the year 1920. And also the one more important aspect is whether notification number 25/1/2018 is a prospective or retrospective. So according to me, there is no express word which is used in the notification to retrospectively, and again there is no right which is provided in the Act to issue a notification retrospectively. So I am of the view that it is only prospective. Any GDA or development agreement which is entered after 25/1/2018, then only this 4/18 will be. And if the JDA is entered after 1/4/2019, then only RCM is applicable. Otherwise, it is a forward charge. In our case, it's a forward charge. Tax has to be paid after 1718. Next, in the next crucial aspect is the same in respect of a construction service. Whether construction service by a developer, when does the time of supply arise? Because we have received a consideration in the 1718 itself, and the liability to pay taxes is started from the year 1718, and notification 4/2018 defers the liability of a registered person to the OC date. Now the crucial thing is construction service. When does the time of supply arises? Any views on this? Anybody want to add any?
Mylar,
Yeah, finish.
for the development right, I would still say that the section 14 can be applied, and and the position as on 1st April 19 is reverse charge. So landowner is not liable to pay tax, is my view.
No, a reverse charge, sir. The 5/2019 clearly says that if the JDA date is after 1/4/2019, then only this notification is applicable. See, this reverse charge notification is not applicable for a JDS which is entered before 1/4/2019. What is it? Am I audible?
You are audible. See, this has partly, there is a change in rate of tax for the development right.
No, sir. First, we discuss whether it's a forward charge or reverse charge. Do you agree that this is a forward charge because the JDA date is before 1/4/2019?
I would still say it is not forward charge. There is, as on the date of OC, there is an exemption notification for the landowner. I would go by the exemption notification of the landowner.
No, exemption will apply once levy is established. If see, RCM is what? Tax levied under 9(1), paid under 9(3) by the recipient.
Correct, sir.
So, if the levy is not, if the RCM notification is operational, then landowner is at liberty not to pay any tax. But
Right.
on the date of the transaction, when supply, because JDA is not a continuous supply, he supplied. Same argument as case study 1. We cannot
Correct.
indefinitely keep on bringing every service tax transaction into GST because one
Yes.
small piece of that transaction is taking place in GST period.
Correct.
So how do you say that it is landowner is exempt? See, the law freezes as on the date of supply.
Right.
Everything else is a matter of procedure, how to discharge what is attracted the incidence.
But 14 also says when there is a change in rate of tax.
No, it's not a question of rate of tax. We are looking at the levy of tax.
No, levy I am not disputing, sir. All that I am
No,
just
if
saying is,
levy has taken place, and the levy is established on the date of JDA. Now we have to only see 13 for services.
Correct.
So how do you say it's exempt?
I am also still thinking.
Okay. Then we'll assume Mylar is correct and we'll proceed with the discussion.
yeah,
because
yeah.
We're not given a task.
Yeah.
Okay. Mylar, continue.
Yeah. So that is what we discussed in the structure development service. Now, again, this also again we develop on the construction service. Again, this construction service has started during the period 17, 18, 18, 19. It has ended up in 1920. And again, this construction service, and there is no event-based payments. There is no such definite payment period. So because of that, even the continuous period of supply, every milestone basis we need to bill, that is also not going to happen. And again, the consideration for this construction service is a TDR, which is received in the year TDR. So,
Mylar, Unisha,
sir.
now you tell me what happened to 1958 Punjab High Court judgment that you were quoting earlier. When it is suitable for you, you will use one case law. When it's not suitable, you will forget that case law. Nah?
No. There also I have not. I have given both the arguments. Sir. There also I concluded that it is taxable in GST.
Right. Okay. Continue.
See, I have provided both the views for and against. Then I have given the conclusion. Again, here also I'm just taking from the same. See, you may be thinking why I'm discussing this, because this is a continuous supply of continuous services which has taken place in the 3 different years. So the crucial thing is because 1780 is already a time bar. If the entire construction service is liable to be taxed in the period 1718, then entire liability need not be discharged. So because of that, so it becomes very crucial to identify time of supply under SPEFA construction service. Now, to discuss that construction service, so like 159 in service tax, we have a notification number 4/2018. See, this notification number 4/2018, the government has introduced after certain period of time, that is on 25/1/2018. Now, what happens for a construction which is undertaken during the period 1718? Whether this notification is applicable for a JDA which is entered before that. First, we discussed about TDR because of that RCM is not applicable, and TDR is entirely completed during the period 1718 before introduction of 4/18. So this 4/18 is not applicable. Now, in respect of the construction service, whether this 4/2018 is applicable or not? Because once it says it is applicable, then the construction service will get deferred. So again, one more aspect we need to see whether this 4/2018 has a retrospective effect that we discussed. It doesn't have a retrospective effect. Only if the transaction which is taking place only after 25/1/2018, then only this notification is applicable. Then again, it becomes this we discussed. Again, it becomes important to see when this construction of supply service is taxable. Then again, we need to move to time of supply provision to check when this is taxable. Yes, since the transaction falls out of this notification, then the regular time of supply provision has to be looked at. Again, one argument, the data provision of service, if the invoice is not issued within the period prescribed under section 31, or the date of receipt of the payment, whichever is earlier. So again, if the discussion will go around what is the payment and date of provision of service. Okay. One, provision of service of a TDR is 2010-2017. There is no dispute and it is a forward charge. Receipt of payments, one view the construction of consideration for a construction service is received on 2010-2017. Can this be linked to payment? And can we say that section 13B as triggered because the payment, which is same argument which we took in the previous example? The one view is the time of supply falls in the year 17-18 and the tax should be paid in the year 17-18 itself. There is no further demand which is possible in the subsequent period. But again, if you take the view and the different interpretation which you have taken for taxes, then again it fall back to time of supply general provision to say that completion of a service. So the time of supply should be on the date of completion of a service. So here also there's a crucial point to discuss, and I hope there are also different views. And now it's open for others to give their views.
Mylar,
Yes, sir.
I just opened 5/2019. There is no requirement for the JDA to be after 1st April 2019. It says service supplied by a person by way of transfer of development right. So that's the position of the law on the OC date. So hence it should be RCM and no levy by landowner.
No, sir, there is a thing. One second.
No, it's there in the 4/2019 for the exemption.
No, I think they rescinded the notification 4/2018 to say that the 4/18 is applicable only till 1/4/2019. Thereafter, 5/2019 is applicable.
And in 5, there is no requirement that the agreement should have been after 1st April 2019.
%, I'm sure. I'll just.
You can open 5/2019. So I would still say that landowner need not pay any GST on the development rate. If you have opened a PDF, that's not visible to us, Myla.
Yeah, and just I'm searching. Okay. Yeah. Meanwhile, others, if you have any other views, you can discuss.
Do you want me to share?
Yeah, if you have readily, please.
Yeah, it's there. Let me share.
Recording in progress.
Madam, what is the date of 5/19, effective date?
Effective date.
2019.
No, sir. There is no date, sir.
No. It has
It's
to have
there,
some
it's
date.
mentioned.
No, it has to have some date. It came in on 29th March 2019.
Correct.
On 28th March, if there is a landowner thinking what he should do, on 20th March, he needs an answer.
Right.
5/19 amended 13/17.
Correct.
5/19 para 2 says this notification shall come into force from 1/4/19.
Correct.
So if the incidence of tax has occurred prior to 1/4/19, what should be the position for the landowner? If the incidence of tax occurs after 1/4/19,
See, here the incidence of tax occurred prior to 1/4/19.
right?
There I am not disputing. But I am saying.
No, we'll take simple example that
Yes,
a
sir.
residential property which came in from 10th October, it became RCM.
Right.
For that half of the month or the 3 weeks of the month, what tax should be done? All the discussion is going on. Everybody has had views about how Section 14 has to apply.
Hmm.
For the supply taking place subsequently, for the 20 days you pay RCM, 10 days don't pay RCM, even if the 10 days rent is payable after 3 months also. If the supply itself has not taken place after 29th, let's take an example. 5/19 introduced RCM. On the same day, levy also took place, which means prior to 1st April 19, there was no tax only. Merely because RCM notification has come in does not mean we will start paying pay the tax. And the same view that Rajesh was explaining earlier. The liability to pay will switch from FCM to RCM after 1/4/19. But the liability should exist. If the liability already exists prior to 1/4/19, the goalpost cannot be shifted suddenly after the parties have entered into the contract. Your views?
I don't have definitely immediate counter, sir, but I'm still
You're only adamant you will not pay tax.
kind of I'm adamant.
No, you have to concede. No, you have to concede subject to correction. But you can't say I'll be adamant.
No, I am just thinking, do I have any counter?
No, till you have a counter, you have to concede to Mylar's position.
And
It is like 14, I definitely cannot apply for RCM.
Sir, SIPA 2019, which specifies a time of supply under RCM, clearly says it is for transfer of development rights on or after 1st April 2019.
Six is only extension of 4/2019, no, madam.
No. 6 is a different thing. 6 is different. 6 is replacing 4.
Replacing,
not extending 4.
Yeah, replacing 4.
So from Madam's point is, from 1/4/19, a brand new tax regime has come into place. It's not seamless that some notifications will operate for the old tax regime also. There's a clear-cut seam. It's not seamless. It is with seam.
Right
5 and
now,
6 have to go together.
Myla, do you remember the notification which suspended 4/2018?
Yes, I'll tell you. 23/19.
Yeah.
30th September 19.
Now we are paying tax basis 4/2018, right, sir? We are paying, landowner is paying tax basis 4/2018 on the OC date. And we are saying on the OC date, the landowner has entered prior, and these are the transactions applicable for 1st April 19.
Sir, in my example, the JDA was prior to 4/2018.
Okay, even if the JDA is like we are now saying that the JDA, since it is before, we are saying pay tax on 1st July.
Yeah.
Now, what if the JDA is on February 2018?
How does it make difference, Venu?
No, if it is February 18, your position is OC date. On the OC date, there is an RCM. But we are saying that RCM is applicable only if the JD is entered after 1st April 19. And there is a levy which is being triggered. But which entry which the landowner is paying, because the 4/, this is where we are doing. This entry is changed. The entry 41 year earlier and now got changed. So there is no entry for the landowner to pay tax for the development rate.
No, sir, you're creating some new rules to justify the conclusion. Anyway, your position is that you're undecided. We'll proceed. Otherwise, we'll keep
Yes,
reading
yes.
while we are there,
Yes, sir.
having presentation.
Yes,
My
sir.
lord, you
Yes, sir.
continue. Go to next case.
Yes. Okay. The next case. My PPT is visible.
No, you haven't shared.
One second. Okay. This next case study is related to revenue share JDA, which this case study which I was referring to, I have taken from Bangalore Chartered Accountants Society's RRC compilation, where the first case study is related to residential real estate project with a revenue sharing agreement. Okay, the revenue sharing agreement, the JDA date is post 1/4/2019. Then the applicability of RCM notification 5/2019. The first question, which is there in the Word file, which is case study, which I shared earlier, a liability on the landowner, as Venu sir was just now discussing, it is under the RCM, and also proportionate exemption is available to the landowner post OC. Because it is comes under RCM, there is no liability on the landowner share. So that's why I'm not stressing much on issue number 1. I'm just discussing issue number 2. Okay. So in the issue number 2, what happens? What is the liability on a developer? Okay. So in the typical revenue sharing JDA, we have one, landowner and developer enter into a joint development agreement, and they will construct a apartment and sell it to a buyer XYZ, and they will collect an amount. They will pay 5% GST on that, and whatever amount comes to a escrow account will be shared between landowner and developer. The crucial thing that we need to discuss it. One, is there any construction service? So there is no construction service because in the area sharing, the landowner will keep some X share of the built up area. Because of that, there is a concept of construction service provided to landowner. But in case of a revenue sharing agreement, the ultimately landowner will not keep any land. Whatever land jointly getting developed is supplied to the end customer, and they will collect a consideration and discharge the taxes. So the crucial thing is to discuss what is the relationship between interstate between landowner and developer. There is no dispute between sale to end customer. The dispute is only related to the transaction between landowner and developer. There is a one school of thought. So I'm in this. I'm not concluding anything on this case study, but I am presenting both the argument which is there for and against. One, the landowner and developer both are enter into joint development agreement. Here in this case, what happens? The landowner gives development rights. There is a transfer of development rights from landowner to developer, and developer will develop a building based on the right which is received from a landowner, and the cash consideration which is derived after the sale to end customer is considered as a consideration for a development right. That is the one school of thought. If you go with this school of thought, what happens? There is a TDR, and as on the date of 4C, the developer has to pay RCM and the TDR subject to exemption notification, which we are aware of. That is one. So we'll discuss second school of thought. One, the landowner and developer with a common object and with the object to share the risk and rewards. Both developer and landowner coming together to take a risk and rewards from a particular activity. In this activity, what happens? The landowner responsibility is to bring the development rights, land, and provide that to developer to develop, and the developer will develop the land brought by a landowner. So typically this transaction is nothing but where we have created a SPV. What happens in the same, but the only difference is we have not created any SPV. Without creating an SPV, the documents are such that the risk and rewards are going to be shared among both. So what happens if this is the concept which we consider, then what happens? There is no inter se services between developer and landowner. Then there can be an argument, the landowner is not giving land for a developer, but both together their share of responsibility, they are bringing the land, and developer on his share of obligation under the agreement, he is developing his construction area. So both together doing a business. If that is the case, there will not be any quid pro quo or services between landowner and developer. But there are two arguments possible.
Mylar,
Sir.
you go back to your previous slide. Are you creating a AOP or a firm?
There is no SPV, sir.
Now then, if you don't create, how are these responsibilities enforceable? As far as the outsider is concerned, as far as the outside buyer is concerned, who will he take to court? Developer will say, look, if there's a land title problem, you talk to landowner. If it is a construction quality, you talk to me. And the buyer of the apartment will have an illusion of rights. He cannot have an enforceable rights with clarity. The structure itself is on paper. In reality, it will not work. Developer is at most only a contractor. Promoter here is the landowner. See, why does the developer enter into JDA? Because he needs interest in the property. He can't pay money for absolute title transfer, and landowner also wants the upside of the development. So they enter into a via media, something inferior to absolute title, but something superior to contractor's rights. How will the structure work? Helpa?
So the Morgum Port Trust case, Supreme Court.
Huh?
Mormugao Port Trust case, based on the.
See, I'll tell you what. Be very careful when you use judgments prior to the development of the law. those judgments. For example, HL versus State of Karnataka, if you see, it will destroy everything you understand as works contract. You understand? Those were the decisions that evaluated the possibility of entering into innovative contract writing, and all innovation in contract writing have been overturned by judgments or by amendments. So whenever you are reading any old case law, please see if that interpretation is still valid or that loophole has been closed. You take DC Srinivas Setty, goodwill transfer is not liable to capital gains tax. But amendment has said cost of acquisition of self-generated asset is nil. So they have plugged the loophole. Are you saying Marmugao judgment has not been plugged? This structure, what you're saying in case law 3, will not happen because the developer is unprotected. Unprotected, he has no interest in the property. And the landowner is completely unprotected because he is answerable, and developer can build a hut and give it to the buyer. And landowner will go to jail for it.
Under RERA, now both are liable.
See, RERA is a welfare legislation. So there they will go and vicariously catch everyone who is involved with to make them accountable for it. You want to take risk and explain this proposition, we'll assume that this is there academically, this structure is, let us say, theoretically possible. You want to explain the tax treatment?
Yeah, that's a
risk ಇದೆ ನಿನಗೆ.
ಹಾ.
ಇವಾಗ ಎಲ್ಲರೂ everyone will jump on you. You should not make any assumptions. Okay, proceed.
Then if that is the case, then proceeding will have no meaning, sir, and again it will be a waste of everybody's time.
Waste ಇಲ್ಲ, waste ನೀವು ಸರ್ಜರಿ ಆಗುತ್ತೆ ಇವಾಗ. ಹಾ. You proceed, you took risk, you proceed. You want to, since we're doing academically, you want to take risk and proceed, or you want to withdraw this case study?
Yeah, I'll just proceed, sir. Another 2 slides.
Yeah, proceed.
Yeah. So because of if one view this, there is no inter se, and if they say one, there is a development services by landowner to developer, and developer in turn selling the flats. If you see both this argument, there is a for and against both argument which is possible. Argument towards non-taxability, it says it's only sharing. It is only sharing of risk and rewards, and there is no services inter se. It is a transfer of land by one person, development by development of the land by another, and both landowner and developer are registered as a promoter under RERA. So there is a counter argument for this. The TDR provides for a transfer of development rights. The document itself provides that there is a transfer of development right. Without development right, there cannot be any development by a developer. And registration under RERA Act, it is by a compulsion for a welfare registration. It is not because the landowner is a actual developer as such. And again, argument towards the non-taxability, there is no quid pro quo which is discussed, and both contribute to the common pool of resources required for running the business activity. And against that, transfer of possession and issue of power of attorney clearly shows that there is a transfer of development right, and tax will be paid on 100% of the flat sold. Hence, one more tax liability on TDR will not arise. There is the argument which is the non-taxability based on the tribunal judgment, but it's the against to that, the agreement itself says there is contains the agreement is to become a construction as a the agreement itself says that there should not be construed as an association, partnership, agency, and joint venture among the partners. So which clearly shows that there is no SPV, and the relationship also should not be viewed as a SPV, which clearly shows that it is the taxability is very much there, and it should be it should flow in respect of taxability. Hence, development right has to be taxed. So there's the for and against the argument which I listed out. I know the floor is open for questions or any other views.
I am not convinced on both parties being together because it's not neither an AOP or not. They created a partnership firm, brought the land and did the development. So there would be still a supply between both of them.
Yeah, there is only one leg of the supply, that is TDR. No construction service.
Correct. That I agree. Construction service is not there.
True. I just counter the one more argument, which is possible based on that Supreme Court judgment, which I told it was very old. So that was the true argument which I wanted to bring before the audit discussion.
Right.
Mylar, you mentioned about this agreement containing these clauses that okay, this should not be construed as a JV or AOP. While there are provisions under the income tax laws also, which deeming provisions is what I understand. So such an agreement is possible and valid. What is your view?
Sorry, Kuber, what you were saying?
The agreement is, you mentioned that agreement is having that clause saying that, okay, this agreement should not be construed as AOP or JV.
True.
But I understand there are provisions under income tax laws, deeming provisions where there is two parties coming together for a common object. Would be deemed to be an AOP or JV of. So what is your view on that? Will even then such agreement will be a valid in what is your view?
No, it says the deeming provision is there in a particular act. That itself means that they are accepting there is a possibility of this is possible, but they want to override that. The deeming itself, provision itself accepted the validity of the agreement. Because it is a valid agreement, they want to deem it in other way around. So they are what a deeming provision.
So you were saying when there is a contract for supply of goods or services, and the consideration is payable after say 365 days. Even then you can place an argument saying that you are eligible to claim input tax credit, not liable for reversal on 81st day.
I didn't understand the concept about this and that.
No, I was talking about the agreements which will not fall in line with the provisions of the act.
Okay. So you are saying that provision as okay. See, the contract is first, but the law can override your contract. See, even though your contract, it doesn't mean that it is void. But any dispute interest between the buyer and seller, the contract will override. Contract will suffice, and they can't demand for a payment before 180 days. But law says if you are not paid this is the consequence. You reverse the ITC, post payment you claim the ITC. That is only set of code, but it does not override the contract, and also it will not invalidate the contract which is entered as per the Contract Act.
So in those lines, we can also conclude that okay, when the contract has this clause that this should not be construed as AOP, even then there comes into an existence, comes AOP into existence or JV into existence for the purpose of assessing the tax liability or tax implications.
As you told, if there is a specific deeming provision in some other law, then for that some other law, this deeming provision will come. Even I got this because majority of joint venture agreement which I checked, there is a provision like this. And also in that mode contrast, which is a very old case, which is not relevant as help me on. There also it says even though the contract uses all these words, but the essence is that they are sharing the risk and rewards. So because of that, I got that. Kumar, is it audible?
Yeah.
made sense or?
Any views on this? I mean, Jatin sir, any views on this or any other members?
Yeah, for some payments,
We were talking about the agreement having clauses which is not in line with the provisions or which is trying to defy certain provisions and come into some kind of an agreement between the parties, saying that, okay, this is, even though that appears to be a joint venture, when it says that, okay, this should not be construed as JV. So when certain agreements or contracts are drafted in a kind that, okay, to overcome certain provisions of the act, what would be the validity of such contracts and agreement was the question, sir.
Allah, see what Myla said, I think is accurate. Contract will continue on its own merits. Treatment of law will continue on its own merits. It's like the example which you gave, 180-day criteria. If there is 270-day credit period agreed, you continue to enjoy 270-day credit, but you reverse the IT credit on sales. Receivables credit you continue to enjoy for 270 days. You reverse the input credit on 181st day if you want to save yourself interest liability. We should not read a conflict when there is possibility for them to survive.
Okay, sir.
Just because GST says 180 days you have to pay does not mean we will force somebody to pay within 180 days. That is that MSME Act. But if GST says I will not give you credit, that's all. You do whatever you want in your business, then you continue to do whatever you want in your business, but don't take ITC. So again, here we have to differentiate between fatal conflict, non-fatal conflict. Fatal conflict will be unregistered JDA. Non-fatal conflict is where divergence of clauses with law.
Noted, sir. Thank you, sir.
Any other questions, points by anyone? Mylar, anything before we conclude?
Yeah, that's all. Thank you.
Okay. Thank you very much, Jatin sir, Rajesh sir, Kuber, and Mylar. Yeah. We will.
Thank you very much. Thank you very much.
Thank you, Venu, for your views.
Thank you so much.
Thank you.
Thank you. Thank you, Jatin sir.
Thank you, everybody.
Bye,
Thank
bye.
you, my lord.